Hello, it's Adil, Mr. Intermarket Analysis, bringing you a review of the FTSE 100 for Monday's trading today, which is the 27th of January 2014. Interesting year so far, folks. Interesting year. It's been a volatile 2014, and it's only been, 27 days into it. Okay, so tricky, very very tricky. Okay, so last week I finished on the live analysis service, just to clarify, with minus 80 points last week. Yep, I was 140 points in the morning. On a Friday morning I was 140 points up for the week, coasting, cruising, and thought I'd buy it. Obviously I shorted the price action in the morning because it was screaming short, given the Argentinian chaos overnight, given the Turkish lira uncertainty, and obviously that diving as well, each central bank trying to control and play the manipulation game. Obviously it doesn't always work, folks. Obviously the Brits are playing it, the Europeans are on the verge of playing it, still discussing it. Okay, and given what's happened in Argentina and what's happened in Turkey, I think they'll refrain, which I have to respect them for that, to a certain extent. And also given the fact the economic data has started to improve, I think they're going to get away with doing any QE at all. Okay, and obviously the side effects and the problems with regards to QE, as we all know, hyperinflation, although that's still not which is a bit of an anomaly, or which is quite strange given the fact that inflation isn't rising as we all expected, given QE 1, 2, 3 so far. But that's certainly a side effect. Okay, so everything's not as easy as manipulating your currency. There are problems, as you can see, with Argentina, as you can see with Turkey, and also China to a certain extent as well, because they've been draining liquidity from the banks, and they had a problem as well over the weekend. Okay, so until the PBOC came out and quashed any rumours that were flying about. Okay, so tricky. Okay, in terms of fundamentals right now, obviously it was a very emotive move last week. Friday I tried to buy every support level there was. Every support level was just breached and chopped to bits and annihilated. Literally, I mean, let's just look at the daily chart for example. I mean, you initially had the support level there around the 6670 level, which obviously I did call for in my previous video, as you'll see, and the markets broke that. Then you had previous resistance equals support on the 50 MA, market annihilated that. Then you had horizontal and previous resistance equals support at 6630, the market annihilated that. On top of that, to make matters worse, you had a massive gap down on a Sunday night, down to the 200 MA. Okay, so that's exactly where we sit right now. So you've got horizontal support and previous resistance equals support around the 6560 level. Now I expect that to hold. Okay, if that does get breached, given the fact that we have held so far, okay, then obviously the next level will be the black moving average, which is the upward sloping trend line, which is 6500. If that breaks, then obviously 6480 is next. Okay, and obviously if that breaks, given the fact that if it does continue to be an emotive move, then we'll come across that when you cross the bridge. Okay, so obviously the reason why I was buying the dip on a Friday, was explained to my subscribers on a live analysis service, was mainly due to Mr. Carney's efforts to debauch the currency. Okay, he attempted to talk the currency down, claiming that exports were dampening. Exports were being undermined by a higher sterling. Okay, and also other BOE members, such as Mr. Wheel, trying to talk interest rates down. Okay. So obviously that was a theory that sterling would then obviously depreciate, which would help exports, and the markets would have a nice short squeeze QE stimulus driven rally. Okay, Mr. Carney has been at it again over the weekend, talking about QE being another trying to be extra dovish now, given the fact that the markets have been butchered and annihilated over the weekend. Okay, but obviously that's still not stopped the rot thus far. Okay, so the FTSE is still languishing at the lows as we speak, although it has held and is building a base around the 200 MA. Okay, so that's generally where hedge funds start to liquidate, especially if they've got any short positions, because this was literally done by hedge funds. The average individual can't shift markets like this. It's definitely hedge fund institutions that collude together to force the markets down, and that's exactly what they did. Okay, I think Mr. Carly Khan was in on the act as well, trying to talk Apple up and trying to get every last retail investor on the long side before they dumped this market. Okay, so it was a professional, coordinated, orchestrated, predetermined, pre-organized dump. That's basically what I class it as. Okay, so and there's a lot of fake outs as well, although the FTSE was probably the only one that was obedient to TA, and the S&P 500. Although the Dow as well, you can argue to a certain extent, but even then, the markets were ignoring China news. I can go on and on. Okay, the market was literally just ignoring all weak data, such as Intel last week. We had AMD earnings week, and yet the Nasdaq still made new highs. If the Nasdaq continues to make new highs, it's very hard for you to justify going short. Okay, given the fact that China was constantly making new lows, yet the markets kept holding the highs. Again, it was very hard to actually go long the market and even go short the market to a certain extent as well. Okay, so very hard to read. Although in hindsight, if I look back and I analyze the market again, I'll probably go short. But hindsight, everybody's a king in hindsight, so it's living in the present. Okay, so last week was definitely a negative one for me, minus 80. But having said that, the fundamental analysis service was doing well. That nailed 250 points. That sort of made up for the loss and more. This week obviously started off well. I mean, I'm already 220 points up this week now. 227 points to be precise. 120 on the live analysis service, and obviously 100 plus on the FAS fundamental analysis service. Now I am doing the fundamental analysis service for free for the next month or two. So if you do want to go on that, please download WhatsApp. Send me an email. Go to my website. All the details will be on there. If you follow the video or follow the links on here, it should be on the YouTube channel. Just follow the links on there. My email address will be on the right hand side. Email me your mobile number once you've downloaded WhatsApp, and I'll add you to a live analysis service for my live analysis alerts. I did have a long position in the morning, but again, that was undermined by the Asian markets hammered overnight. Okay, so it distorted a lot of my analysis. I then subsequently went short, but that then again was distorted by Turkish intervention, which obviously any signs of central banks intervening, folks, always remember, it generates a short squeeze. So I was short the Kiwi and the Aussie, and I managed to get out, thank God, just before the news regarding Turkey, and obviously now Kiwi and the Aussie are ramping higher. So that obviously has created a reprieve or relief for the emerging markets, and that's allowed the markets to obviously short squeeze higher. So that's basically what's happening right now. So given the fact that the currencies are now enjoying a reprieve, given the fact that central banks such as Turkey is intervening, then that obviously gives hope for other central banks to intervene as well. Now the other obviously conundrum that we have to take into account as well in terms of fundamentals, and really I'm not a conspiracy theorist, but I'm just somebody who thinks out loud, is that this whole concept or this whole emerging market crisis, it's just a bit of a coincidence just before the Federal Reserve. Okay, Federal Reserve's coming out on Wednesday regarding their tapering decision going forward. Call me a cynic, but it just sounds a bit fishy to me. Just the way in which it's been done and the way in which it's been orchestrated and blown out of proportion, and the emotive moving the market. So given the fact that the emerging market crisis is there, that is obviously going to give an excuse for the Fed to delay the taper. So obviously more QE, etc., and then the stock market should obviously bounce off that 200 MA on the FTSE. So that's the theory. Adding the fact that Mr. Carney is dovish, and he was dovish on the weekend as well with his article in the Reuters and also the FT talking about a dovish policy, etc. Again, that's something that will obviously help the FTSE going higher. Okay, and given the fact that obviously German data this morning was strong, and German data and European PMIs last week was strong as well, so technically the market should continue to march higher from here. So but having said that, again, emerging, the markets are very emotive right now. A lot of damage has been done, given the fact that the markets gapped down quite viciously on a Sunday night. The bulls really have had the horns, up the back rear ends, shall we say. So they're going to be battered and bruised. I can't see them coming back with much ferocity, to be honest, especially after this move. So again, central banks, once they're in play, they can short squeeze any market. But having said that, are there any shorts left? A lot of them probably already covered into the 200 MA. I can't see them opening up new positions as of yet or as such. So again, I think just sort of neutral from here now, neutral to sideways, I'd say personally. That's why I'm flat right now. I'm just closed my short position on the FTSE on my FAS fundamental analysis service, swing trading service, also on my day trading service, and sitting on my trading fingers as we speak. Okay, waiting for the next potential setup. Okay, I'll see if the Nasdaq holds strong today, given the fact that you got earnings coming out from Apple. Then I'll probably be a buyer of the Nasdaq if anything. Okay, but again, we'll see how US price action reacts. Having said that, the ramp in the USD JPY must be respected. The ramp in Euro JPY right now must be respected. The bulls are back. Okay, not bulls are back. The central banks are back. Okay, because that's one carry trade that's been quite popular over the last year or so. So if the central banks are actually annihilating the yen and they're colluding together, then obviously that will help the markets recover. Same goes to same thing with regards to the dollar as well. As you can see, Aussie JPY, Kiwi dollar is obviously moving higher at present as we speak. That obviously means that risk flow is coming back. Investors' appetite for risk is certainly on the increase again, given the fact that there'll be delay in tapering. So obviously dollar's weak. Okay, so obviously put 2 and 2 together, and that means that the markets will obviously short squeeze higher in anticipation of tapering being delayed. Okay, adding the fact also with regards to the euro dollar. Just bear that in mind as well, folks. This is an observation that I think I've stated a few times now, especially to subscribers. Is the Euro USD has now become a safe haven. Whenever the stock markets sell off, Euro USD will go higher, and vice versa. So always keep an eye on that. Okay, you can't class it as a risk FX barometer as such anymore, given the fact that it has become a safe haven, such as the yen, the dollar, and the euro, which is really ironic given the fact that given the concerns that likes of Mr. Soros has been parroting for the last few years, and now he's on a U-turn. So anyway, that's basically how we're interpreting things at present. Let's just take each trading day as it comes. Okay, so let's try and look at technicals now that I've covered the fundamental aspect of things. Okay, as you know, emerging markets caused a sell-off last week. You got the Argentinian pesos, you got the Turkish lira, and then you had concerns in China as well with the liquidity drain, the credit crunch, and etc. etc. Okay, now you also had some problems regarding banks not withdrawing cash from the weekend, which almost I think that was probably the trigger that caused the FTSE to hit the 200 MA. But having said that, that was all priced in then. The markets were all priced in all the bad news that there could possibly be, and obviously the markets have obviously moved higher since then. So after knocking out all the stops, so market makers, the only profitable individuals in the last, I'd say, 2 or 3 days of market makers. To be honest with you, they made a hell of a lot of money knocking out stops. Anyway, let's get back to trading. Okay, so technicals. Okay, so technicals. Where are we now? So let's just start with the weekly chart first of all, although it's delayed at present. Okay, here we go. So bearish engulfing candle on the weekly chart obviously doesn't bode well for the FTSE. Bears back in control, firmly back in control. Okay, so basically the next obviously is another fact that upper double top held. 1 second. Double top held, bearish engulfing candle. We're looking for some consolidation, and you will be looking at 6,600, possibly lower, 6,500, possibly lower, 6,400 in the foreseeable future. Okay, so that's basically a weekly outset or weekly outlook, basically. So watch out for further downside. Obviously, we're into the 200 MA, which I expected to a certain degree. Although on a Friday, I was forecasting the 666, the devil's number, to be for the markets to bounce. But obviously, given the fact that the Asian market sold off quite viciously, the emotive move of the market makers pissing about, shall we say? Excuse my language. Okay, the market basically shafted all the bulls and went right down to the 200 MA overnight, and then miraculously recovered in the morning. Surprise, surprise. That's why I went long at 6548 with subscribers, as you know, documented on my website. Feel free to have a look at the fundamental analysis service, and obviously subscribers know my live analysis service that I actually was long at 6548. Okay, so that was a nice little morning treat to see the FTSE up plus 40 on the LAS service, and obviously plus 60, 70 odd on the fundamental analysis service. So here we go. So we're back down to 200 MA. That should certainly hold as support. As you can see, multiple horizontal levels. You've got the 6560, 6530. So that's solid support. I can't see that being broken. But I mean, I'm not the king. I'm not the one who dictates or makes. I'm not the Federal Reserve, should I say? Okay. I'm not the one who dictates and moves the markets. It's the markets that will choose which way they want to go. If obviously the 200 MA breaks, then obviously we know is the 6500 next, and obviously below that again 6450 and 6400, and obviously you got the levels below. So keep an eye out for that. Okay. Now let's have a look at a 10-minute chart, see if we can gauge anything from there. Actually, whilst we're on here, let's have a look at the FTSE 250 quickly. Okay, FTSE 250 flush, one hell of a flush. Obviously now that we know that the 15,500 level we're looking at right now, that should hold. We're at the 15,500, and obviously that has held thus far. So that's certainly a level to watch out for. So 15,600 and 15,510, or 15,500 basically, where previous resistance equals support for the FTSE 250. So we still are in the same period of higher highs and higher lows. So innocent until proven guilty. The trend still remains up. Okay, regardless of the Argentinian and Turkish chaos that we've just obviously witnessed, the bias still remains higher. Okay, so certainly can't become a bear all of a sudden on the FTSE 250, because it is very, very firm. Okay, the trend is very strong on the upside. Okay, so keep an eye out for that. Okay, as an individual. So don't get obviously excited with the downside. Okay, so here we go. Okay, so we've got an unfilled gap above on the 10-minute chart. Okay, so that was a justified gap down, which I explained to subscribers this morning. The market continued to sell off, obviously flush. Okay, so once we closed our longs from the 6548 level on the long side, I then initiated shorts around the 6610 level, 6614 level, 6616 level, 6617 level. Got a good average and flush. Okay, the market sold off, closed my shorts, and then I've sat back ever since. Okay, I want the market to play out, see what it wants to do. I'll keep observing price action, see how it reacts. Let's see how the FTSE dances. Okay, and then we'll give it marks out of 10. Okay, and then I'll see what we can do with regards to that. But just for now, just looking at a glance at this chart right now, you've broken this downward, low lows, low highs. We are looking for a potential reversal now. Obviously, just keep an eye out for. Obviously, this is a pattern that broke out to the downside. I am looking now, given the fact that the Turkish bank have stated that they're going to intervene. There is some news regarding Argentina, and the Chinese situation has been resolved overnight. Then we are looking for a nice little bounce back. So, like I said, I'm looking to buy the Nasdaq later on and look for a nice potential long. And remember, all gaps must close. Okay, so this gap here has to close. So I'll be looking for a potential setup to close this gap at 6660. So that's another potential setup in the waiting as well. So see exactly what happens there. But for now, excuse me. Okay, but for now, obviously we're in this zone here. Okay, we're breaking out, looking for a potential inverted head and shoulders pattern, looking for a base, and then obviously we'll propel higher. Okay, that's a 10-minute chart. Okay, so. But we do need a catalyst. The German data, economic data coming out this morning, IFO data coming out better than expected is one catalyst. Turkish central bank intervening is second catalyst. Chinese central bank intervening, or actually getting involved with regards to the liquidity crunch and the concerns that they had. Then that's obviously dispelling any myths. Okay, any rumours out there. Again, that's another catalyst. All we need really now is some good news out of Argentina, and then this market will certainly look to close that gap at 6670. Okay. So the downside is certainly, I think that's enough for now, and then obviously we're looking for the potential reasons for the markets to close that gap above. Okay, so let's see how the Nasdaq reacts. If the Nasdaq puts in a base, then I'll certainly be looking to buy that, and I'll be looking to buy the FTSE as well. Okay, right. So given the fact, obviously, Mr. Carney's debauchery or currency debauchery, that's another argument as well. Okay, so 60-minute chart, keep an eye out for that. Although you do have an unfilled gap down here. The unfilled gap is around the 6480 level, so that you must be aware of that. Okay, so very, very important. Excuse me, very, very important for us to be aware of that. Okay, and see exactly how the market evolves. Okay, so very, very important. Okay, for us to do that. So let's have a look here. So. Okay, understood. Okay. That's all, folks. I think I'll call it a day there. And risk on, risk off, wax on, wax off. Goodbye now.